Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Jordan Saxe, head of healthcare listings and capital markets at Nasdaq, to discuss trends in biotech listings, as today is the last day of January and also the last day of National Biotechnology Month. Jordan, it's great to see you again. Welcome back to Trade Talks.
Great. Thanks for having me.
All right, you got it. And can you speak to the explosion of biotech offerings and their performance over the past 6 months?
Yeah, so we are coming off of a record year here at Nasdaq with 99% of the biotech IPOs listing, not only the number of IPOs, but proceeds raised and overall performance, and performance meaning valuation step up from their private round. So with over 110 biotechs last year, there's clearly a lot of interest on the investor side to deploy capital into what I call truly an innovative space. And the numbers from last year just reflect that.
A majority of last year's biotechs were pre-revenue, and to your point, many of them traded at high valuations. Do you expect this trend to continue in 2022?
So that's one of the things that we're watching this year to see how investors react to the last year's valuation relative to this year from a pricing environment. I would say it's early to tell. There have been a few biotechs. Obviously, there's market volatility where the VIX is trading north of 30, just some geopolitical risk, and everyone's been watching the Fed news. So once all of that kind of digests through the market, we'll start to see another window for biotech IPOs open up. Once these biotechs start trading, we'll have a look at how these deals price within range, above range, and then also another kind of read on investor sentiment. But I can tell you from the Nasdaq perspective, we have a over 75 wait list of applicants that are in the biotech sector that want to go public. So from a demand perspective, inventory, we have plenty. The real question I think out there is from the investor side, what the appetite looks like and at what valuation. So some of those last year were preclinical companies. That means that there's a longer readout before data becomes available to the investors. Typically, these companies had those readouts in the private markets, and the cohort of companies that went public last year, in the next, call it 12 to 18 months, we'll probably see those data readouts in the public market. So that'll be really interesting to watch. And depending on how that data readout and data set looks, it could spark another wave of preclinical biotechs that have been kind of lifted up with the rising tide. Or it could also mean that these companies end up staying private longer and coming public with more robust data, because investors want to see that before they kind of take a preclinical company out as quickly as it did last year.
Can you shed some light on the current number of healthcare SPACs and their presence in the sector?
So there's been a SPAC phenomenon, as I'm sure everyone has been reading about, and that does not exclude the healthcare SPACs. So healthcare SPACs actually have been one of the shining lights in the SPAC sector, because that is the only subsector of SPACs that's been able to go out without a warrant, or as a way of thinking about it as enticement for investors to purchase the SPAC. So the strength of the SPACs in the healthcare sector are strong. Sponsors behind them are smart and sophisticated healthcare investors. And that has led to a lot of announced business combinations with healthcare SPACs and potential targets. So we continue to see more and more business combinations be announced, which is a positive thing. I do think it's still a little early to measure the success, because it will take at least a year, if not longer, from post-business combination to reflect on how these transactions really did from a measurement. So like I said, last year, a lot of deals listed, some announcements. We're seeing more and more announcements. And then I look to the end of this year to mid next year to kind of look back and say, what's the performance look post 1 year out?
So Jordan, you had mentioned before that there's kind of a bottleneck with the market volatility that we've seen in January, and you'll get more clarity in terms of volume as we go through the first half. Is there anything you can see in terms of how healthcare and biotech companies are choosing to go public, whether it's traditional IPO or SPAC? Is it a 50-50 breakdown, or is it swaying towards one type of access to the markets or the other?
It's really a mix, and it's company-centric, I would say. Historically, there were two options as you were getting closer to an IPO, which was an IPO or potential M&A activity. The SPACs have brought a third option in, which is a business combination. So it adds another optionality for a company that's looking to go public. And I think it's a good thing for the marketplace, but there hasn't been one dominant shift. It's been a pretty mixed split, I would say. SPACs are accounting for about 25% of the IPO market right now, and that could grow, that could decrease. But it's nice for companies to know that there are alternative options than just M&A or IPO.
And finally, Jordan, can you shed some light on the type of biotech companies that are leading the way, or what subsectors within the sector are looking to go public?
So we're seeing a lot of interest from what I call the digital health space, as well as the medical device, fast growth med device space, outside of the traditional biotech market, where you see a lot of innovative companies in genomic medicine with huge TAMs like oncology. And there are some really unique things that have happened now with the intersection of data and healthcare, from a machine learning, AI, leveraging the cloud to make sure that the companies that are working to develop therapeutics are doing it in the most efficient, smart way possible. I think having that combination of tech meet healthcare is really where we're at the intersection now, and the beginning stages that will play out over the coming years. And I would expect to see more and more companies in the healthcare IT or digital health space come to market, more innovative medical device companies that are leveraging the democratization of technology, and also a healthy pipeline of what I would call your traditional genomic medicine companies, and even future things like proteomics and maybe one day cancer vaccines. Hopefully, there will be a company out there that solves cancer, and 99% chance it's on Nasdaq. I don't know which one it will be, but we're really excited to watch, and as the space continues to evolve, because the science and technology has never been as strong, and the breakthroughs are coming at amazing paces compared historically.
Well, that's certainly encouraging to hear, Jordan. We appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks.